Welcome back. Another Talking Technical, and of course, as we know, we've got a lot of requests, and let's kick off immediately. Pete wants to know about Barrick Gold, and he's quite serious. He said, Frans, on an email, he said, listen, I believe that Barrick Gold is a stock for the future. Well, maybe he's right. I don't know if he's wrong. If I look at this chart, let's see if there's any clues. Well, Pete, if I look at the stock, look what happens here. First of all, this is something just to keep in mind if you look at the stock. If you have a stock doing this sort of action, rally from $18 to $22 within a day, falls back all the way to $18, then up again to 21, then down to 15. First of all, I would like to say I don't think that's a stock for the future, because it will give you a heart attack, and you will go all around and just see if there's a way that you can maybe get in and get out. So what I say is, if you want a stock for the future, you want a stock with this kind of action. Slowly but surely it grinds higher, it makes a low, another higher low, and it carries on like this. Maybe it carries on like this for 2 or 3 or 4 years. There's a saying that's in the market that says, boring is always better. Now, if you look at the stock doing this, I'm a little bit nervous. Let's have a look at the weekly chart, just to come back and say, what do we see here? Let's have a look. I just want to go there quickly, sorry. There you are. Let's have a look at the weekly chart of Barrick Gold. If I look at this, is this a stock for the future? I doubt that. I say to myself, whoa, the action here is like you actually say it is untradeable. What happens? From 2016, it goes from $7 to $22. So I'm going to stick to the theme where you say, listen, it is a stock for the future. Now, for me, gold is not an instrument that you just buy for the future. Maybe gold, physical gold, maybe a new gold, maybe one of those instruments. A gold miner, it's sometimes difficult to look at that. Now, let's have a look at it. First of all, from June 2017, it makes a beautiful rounding bottom. And that is positive. That tells you it went down all the way, and from there on weekly charts, it went a little bit higher. What I do like about the chart is, look what I see here. There is an inverse head and shoulder here. And the neckline broke at 1922. Now let's see where the target is. First of all, that is my projection from the head to the neckline. And let's go from here and we extend it. It can maybe take us to around 27. And can you hear that I use the word maybe? Remember, technical analysis is not an exact science. It's always a case where you need to say, if I'm close to 20 Rand, it can maybe turn around 1980. And remember, markets are not exact science at all. We've seen now in the past that markets can drop significantly and surprise everybody. Look what we see here. I showed you the neckline, but what I don't like about it, look at your stop loss. At 19 Rand, $19, that's your buying level. And where's your stop loss? It's at $15. That's a big stop loss. And you'll see a lot of these shares nowadays give big stop losses. The reason being, after the sell-off that we've seen in the last 2 months, a lot of the shares tries to find an equilibrium where they are happy to trade a little bit up and a little bit down. And that's why all the stop losses are maybe a little bit bigger than all of us anticipate. So, yes, you can buy it above the neckline, stick to that stop loss, and if it plays to the top, it can go to $27.50. That's not a bad move. Keep in mind that a gold miner, like a Barrick Gold, a Harmony Gold Mine, an Anglo Gold, all those counters, they are very volatile. And they are not stocks for the long term. It is to trade them, rather stick to maybe a new gold or something like that that is more stable. And you see these wild swings, because I've seen a lot of guys that cannot live on all these wild swings. Well, let's have a look at Uber. Well, remember now, what we see now is that a lot of the companies is almost closing down. And if I look at this, you must remember now that if you look at Uber, what happens here is that, remember, with all these lockdowns around the world, you can see now that Uber is also struggling. It almost fell off a cliff. I mean, this is a weekly chart, but I want to go to a daily chart because, I mean, a weekly chart is a bit extreme. Now, let's have a look at the daily chart here. And Leon asked about Uber. Now, Leon, look what we see here. We see again this ugly waterfall formation. It drops and it drops and it drops all the way. Now it gave us this beautiful bounce to the top. And now there's a big thing to develop. Either Uber must break above this line. Let's have a look here. I want to draw it. I'm going to use this line there, because I always like to use support or resistance line unless it's 100% horizontal line. If it is a skew line, I try to use either 1, 2, or maybe if I'm lucky 3 points. Now, Uber is on the brink of giving a buying signal at $27.60. But can you see now what happens here? Your stop loss again, once again, is at $22.76. That's a big stop loss. But the other thing is, and I mentioned it earlier on, be careful of this market, because if you see this massive, beautiful V reversal, and it comes back. Now, a lot of guys will say, Frans, this is a cup and a handle. I think this is a little bit steep down and straight up to have a cup formation. But on the other hand, if it breaks here, yes, we can go higher, because what do we see here? We see a low, and we see a higher low, and then that confirmation, and where will be a higher high? That's quite important. The moment you want a higher high, you need to do this. You need to take that same line and get to that point. So, first of all, you need to see the resistance line break. And then if you want a higher high to get confirmation that the momentum wants to go up, you need to see a spike above 28.18, and then of course we can go all the way back to that high there, 31.05, 32.13, 32.83, and maybe 34.75. There's just something that I want to leave with you. The markets has been carrying on non-stop. It did not stop. But the economies of the world stopped. For almost 3-4 weeks now, everybody is in a lockdown. And I'm just thinking now, and remember, I'm not a fundamentalist, and I always laugh about it because a guy once called me, I'm reading Boesman tekeninge in Afrikaans. I'm happy to be a Boesman tekeninge reader. So what I say is, fundamentalist will say, Frans, after this drop, we need to see where the earnings reflects in the share price after the lockdown. Keep that in mind. We've got it with a lot of shares. It gave beautiful bounces, and I think we need to get to a point where there's like an equilibrium where the shares are happy to trade, a happy medium. Well, let's have a look at EOH. Martin asked about EOH, and he is a big supporter of EOH because he says what happens now, he sees that the company is actually starting to cut back on pay. And what do we see here? This chart is now eventually, and I've discussed this share a while back. And I said, let's be a little bit patient and let's just see how this chart develops. Now, that's right. Martin, look at it. All the way down, waterfall formation, slowly but surely. Then it gives us a rounding bottom. Now, you, I'm sure, read about it. You either get a V reversal. We showed it now on Uber. A sharp move to the upside. Excuse me. And then you get this, what we call a nice rounding bottom, and some fundamentalists will talk about a U reversal. So that means it takes a little bit of a time to move higher. Now, of course, as we know, EOH got now a history where there's a lot of corporate action going on. The management, and especially the CEO, is really trying to sort things out, and he's cutting and he's making plans. And I think, excuse me, what we see here is that the informed investors starting to feel happy about the price. Now let's just have a look here. Where will this share give us a buy? It is on the brink of giving us a buying opportunity. The only thing that worries me about EOH is if you have a market that dropped 40% and it recovered a little bit, and it gives you a chance to get some money into that market, what are you going to buy? Are you going to buy a company with a lot of corporate issues that needs to get sorted out, or would you like to buy rather a share where you know that there's no corporate action going on and that you can maybe see a turn in interest, in good business practice, and on the other hand you can see the earnings ratios and all those things picks up, and maybe even a dividend, even if it's later, because I see a lot of the companies are talking about withholding dividends. So yes, EOH above Martin, above R3.60, it looks promising to me, and I will use this as my stop loss, R2.62, and the low maybe R2.25. I just want to do something else here. I would like to have a look just at the candles. Now, this is exactly what I'm talking about. I didn't even know about it. I just had the urge now to show you. Can you see this chart here? Look what happened today. I'm going to take that line away because all of us know about that line now. Let's have a look here. Look at these spikes. It goes up from R3.55 in one session to R4.94, fell back. And look at it, even today there's a doji. So I will say, I like these candles, but just look at this. What worries me a little bit is the following. Look at these shadows on top of these candles. It shows me a lot of nervousness. So Martin, be careful, but you can buy it on the line chart. It looks promising, but maybe there's some better buys. But I mean, there's nothing wrong to buy a stock and you're happy with it. As long as it goes up, it is a favorite stock. It's not a dog. Well, thank you guys for watching the show again. Visit our website, www.fransdeklerk.com. Thank you. Goodbye.